Guys, today we are going to discuss about statement of cash flows. It's unit 1 and last topic 1.5. Statement of cash flows. So first of all, we have to understand what is the cash flow statement and what is the purpose of statement of cash flows. Actually, statement of cash flows is the one of the component of financial statements, and it always provide the information about what cash receipts and cash payments, right? During the period, like how much cash you have received or how much payments you have made. So this is what is statement of cash flows. By the way, the ultimate objective or the purpose of cash flow statement is to check 2 to 3 things. Number 1 is what the purpose of cash flow statement is to check liquidity, solvency, and what? Financial flexibility. Liquidity means to say, by definition, like it is the ability of the company to pay current liabilities as they fall due, right? So obviously to pay our current liabilities, we need a cash information and we need a cash, how much cash we have. Solvency is about the ability to pay your non-current liabilities. Obviously for that, we also need a cash, and this information is provided by cash flow statement. And financial flexibility, third purpose. Financial flexibility in terms of planning. Like for example, if you have a cash deficit or if you have a cash surplus, so you can make a plan. If you have a deficit, you can plan like from where to overcome this deficit, or if you have a surplus, where to invest, right? So this is what is the purpose. So mostly these questions might be tested in exam also. Like you have to explain the purpose of cash flow statement. And cash flow statement always provide us the information about what? About cash and cash equivalent. There are 2 words, cash and cash equivalents, right? Cash means to say it could be a hard cash, right? Mostly you might hold some cash with you, okay, for day-to-day transaction or for investment purpose. So that is cash. So what is the cash equivalent? So cash equivalents, we have to understand it, guys. Cash equivalent means to say these are not a hard cash, but it is close to the cash. For example, sometime you buy the government securities, which is also called what? Treasury bills. These are short-term investments. Or you might invest in what? Commercial papers, right? So, or maybe you might invest in what? Money market funds. So they are treated as cash equivalents. So as per definition of cash equivalents, so what is the definition? These are those investments which are readily convertible. Readily convertible means easily convertible into cash to the known amount of cash, like which can be converted easily into cash and amount is known. Easily convertible means to say like you can convert at least within 90 days. Like maximum within 90 days you can convert into cash and amount is known, right? So as an example, for example, just have a look. So there is a 90 days means 3 months we are talking about. Anything which can be converted into cash within 90 days and amount is known, that is called cash equivalents. So here we go, here we have a small example to understand and see what is the difference. So they're saying, for example, when you invest in any securities with the original maturities of 3 months or less, okay, qualifies for cash equivalents. Let's assume here we have an example. That's a 3-year treasury notes. Like if you are investing in 3 years treasury note, meets the definition of cash equivalents if purchased 3 months from the maturity. For example, So this treasury note, I'm just giving you example, is going to expire on 31st December 2022. And you bought in October 2022, for example. So now this can qualify as a cash equivalent. Right? This can qualify because you bought when? You bought from 3 months from the maturity. This is the keyword. And look at the next part, what it says. However, if the note was purchased 3 years ago, and now it is remaining, only remaining 3 months are there now. Now you cannot classify as a cash equivalents. Only those securities can be classified which you purchased from 3 months from the maturity. Within 3 months from the maturity. That is cash equivalents. Okay, guys? So here we have some additional information. Whenever we prepare the cash flow statement, mostly we divide our cash flow statements into 3 sections. Right? So the first section is called cash flow from or used in which activities? Operating activities. Right? So we need to understand here what does mean by operating activities. Operating activities mean to say normal or your ordinary activities, whatever you are performing. It is also called ordinary principal revenue generating activities. Like whatever normal activities you are performing to generate your revenue. Right? So those are called what? Operating activities. For example, if you are running a business or a grocery store, so whatever your normal activities are there, right or wrong, so that is called what? Operating activities, like routine purchase, routine sales, right? So these are called your operating activities. We will see in detail, don't you worry. But the point is, so you have to write in this section, you have to write inflows and you have to write what? Outflows. And at the end, the result will be either net cash flow from operating activities. From word you will use if your inflows are greater than outflows, or if your final answer is positive. Sometime it might happen your outflows might be more than inflows. If your outflows are more than inflows, so then we will use the word cash flow used in operating activities. Okay. Second, under operating activities, what categories will fall, that I will explain later. Just I'm giving you overview. Second is what, guys? Second section of the cash flow statement, that is called cash flow from or used in which activities? Investing activities. Mostly here, which things will fall? Mostly under investing activities. The transaction within your own property, plant, and equipment, that will fall here. For example, when you buy non-current assets, it's investing activities, right? Or when you sell non-current asset, it is investing activities, right? Or when you buy the stock or bonds of other companies, it is also your investments. Or when you will sell the bonds or stock of other company in which you have already invested, that will also fall under investing activities. Or for example, you are giving loan to others, it's not your normal operations. Maybe you are making advances or loans to others, that will also fall under investing activities. Then again here, obviously here you will also record inflows and outflows. If your inflows are more, I mean, so you got a final positive answer. So this is called cash flow from investing activities. If your answer is negative, I mean, outflows are more, then it is called cash flow used in investing activities. The third section of the cash flow statement is called financing activities. Under financing activities, mostly, we deals with our sources of finance. You know, the business is having sources of finance, right? For example, you are issuing stocks to get money. You are issuing what? Bonds to get money, right or wrong? Or you are taking what? loans from other to get money. All these are called which activity? Financing. Plus relevant to stock, maybe you might have a stock repurchased, right? For repurchased stock, you have to make repayments. It's also part of financing activities. Maybe you are making repayments for the bonds, especially principal amounts. It is also part of investing or financing activities. And maybe you are making repayments of loans, principal amounts. It's also part of financing activities. Right? So this is just overview I'm telling you. Now, in detail, as I will discuss operating activities, exactly what will fall under operating activities, we will discuss. Right? So just I give you examples. Now, guys, here, this is the condensed format for statement of cash flows. Detail we will discuss. Shortcut format. So what we have to do in order to prepare statement of cash flows? The first thing you have to get cash flow from are used in operating activities. And it is written there, note 1, we will discuss there, which items are there. So obviously you could have positive answer or you could have what? Negative answer, depending cash inflows are more or outflows are more. Second section of statement of cash flow is called cash flow from are used in investing activities. Again, your answer could be positive here or negative. Third section is called cash flow from are used in financing activities. Either your answer could be positive or negative. Now, guys, once you will plus minus all these three sections, so this is known as net increase if your final answer is positive, or decrease if your final answer is negative in cash and cash equivalents for the period. This is for the period. And then, guys, here you will plus what? This is also called movements in cash flows during the period. This side. Okay, movements in cash flows during the period. And then, guys, you have to add here plus beginning balance of cash and cash equivalents. Okay, this value you can also take from last balance sheet, last year's balance sheet, because that balance will become the beginning of this year. So if you will plus minus these two things, this is called closing balance of cash and cash equivalents. Okay, at the end of the period. Clear, guys? Now here, before moving to the detailed side, let me tell you, because sometimes this question could be tested in essay style also. Maybe you are required to prepare their cash flow statement. Right? So obviously you need to score easy marks, which you can just get the mark just by putting some data. So first I'm telling you, although by ignoring all these things, investing activities, financing activities, or operating activities, I can find this value very easily by using my balance sheet itself. Even this value and even this value. Shortcut. Because if you will place these values obviously in the format, you will get marks for this also. Right? So first, I'm going to tell you how you will get this section directly without working with operating activities or investing activities or financing activities. So how we can get easy marks. So guys, please remember here, you have to just work with these things by looking into the balance sheet. Here I'm putting here brought forward balance. Here I'm putting here what? Carried forward balance. Brought forward mean to say opening balances. Carry forward mean to say closing balances. Okay. If I will place this information here, and if I will get this information from the balance sheet, so obviously 2 years data should be available. So almost final answers you will get. So brought forward balance is of what? You have to take balance of cash of last year and of current year. Plus you have to add here what? Cash equivalents. Right? Because if you told in the balance sheet cash equivalent separate category, obviously you will take that value and you will add. Last year you will add in the last year, current year you will add in the current year. And from there you will subtract what? Overdraft. What? Overdraft. This overdraft mean to say, sometimes we agree a limit of kind of loan with the bank, right? Or like a credit card. But when we use, maybe you will pay interest. If it is unused, you will not pay interest. So this overdraft will be given under which section? Under current liability section. And these two information will be given under current asset section. Right? So overdraft value, if you have any value, you will deduct. You will deduct. So this is the final value of opening, and this is going to be the final value of closing. And the difference between these two is called movement. It's called what? Movement. It is also called net increase or decrease in cash and cash equivalent balance for the period. You know what? This movement, the difference of opening values and what? Closing final values. The difference you can place it here. This is called what? Net increase or decrease in cash and cash equivalents for the period. Right? And you can complete this format. So once you place one value here, closing balance you already have. Right or wrong? In this format, which is the closing balance? This is the closing value. Right? You can place it here as a closing value. And opening value you also have in broad forward column. You can place it here. So see, at least you can score some marks without working with anything. Is that clear? From balance sheet. From balance sheet, he will provide you the data. Okay? Otherwise, if opening values are not given, obviously you have to then work. Right? Now, guys, here we go. Now I'm going to tell you, we are going to discuss now in more detail, like what exactly things will be the part of operating activities. Please, guys, remember here, in operating activities, to present operating activities, we can use two methods. Just for operating. Either we can use direct method or what? Indirect method. Answer will be same regardless of the method which you have used. Okay? So what is direct, what is indirect? But for your exam, which method is examinable? Indirect method. Direct method is very simple. You have to think practically what you are receiving from operation and what you are paying for the operations. For example, you are receiving cash from customers, inflows, right? You are getting cash from the sales, cash sales, inflows, right or wrong? You are making payment to supplier, outflows, it's operating activities, right? You are making maybe interest payments. We will see for interest what is, let's assume it is operating activities. You are making payment to employees, it's outflow or operating activities. It is direct, we have to think this way. But complicated method is which one? Indirect method. And why this indirect method? Why it is called indirect method? Let me just tell you here. Actually, indirect method mean to say, guys, indirect method. Actually, we have already prepared what? Income statement. Right or wrong? When we prepare income statement, what we have to write there? Sales less cost of goods sold is equal to gross profit less what? Expenses. If you have other losses and other gains, you will plus minus, right? So you will reach to what? Profit before interest and tax. You will deduct here what? Interest first. This will give you profit before tax. Then you will deduct what? Tax. This is what your net income. Right or wrong? Because whatever I will explain as per US GAAP, which we are studying. Right? Now, what is cash flow statement? Please focus with me. Why it is called indirect method? So for cash flow statements, I'm talking about which activities? Operating activity. Operating activities. What we will do as per US GAAP, we have to pick this value from the income statement. What? Net income. Because this is the income which has already adjusted for so many different types of expenses and revenues. Right or wrong? And this net income we have to adjust for certain items. Right? Number one, that's why it's called indirect, because we are taking net income and we are adjusting for certain items to arrive at cash flow from operations. Number one, we will take those adjustments, okay, which are non-cash based. Which one? Non-cash based adjustments, which are already written in the income statement, but they do not have any cash effects. So we need to adjust. Example is what? For example, depreciation or amortization expense of intangible assets. So these are non-cash based items, but you have deducted in the income statement, right? So how you will adjust? By adding back. You have to add back to the net income. So first I told you we have to adjust for what? Non-cash based item. Second adjustment, which we have to do, we have to adjust this net income for those items which belongs to either which activity? Investing activities, or which activities? Financing activities. We need to adjust those items also under operating activities. Examples are what? For example, we sold non-current assets. You know, non-current asset is investing activities. We sold it and we got a gain or loss on that. That gain or loss is included in the income statement. And we have to remove from here now the reason it belongs to investing or financing activities. Same here, you could sell investments, some other investments, bonds or stocks of other companies, which is the part of investing activities. Right? But the gain or loss on the sale of investments is included in the income statement. So we need to reverse from here. Clear? Third category is for deferrals. For what? Deferrals. Right or wrong? Deferrals mean to say, I can give you one example for deferrals here, like deferred income. What? Deferred income. Deferred income is also called unearned income. Deferred income is also called what? Unearned income. Right? It is a kind of liability. What? Kind of liability. For example, I'm just giving example because why we need to adjust. Deferrals might have some cash effects. Okay? For example, because it is your liability. Let's assume last year, I'm just telling you, because it is liability, changes in liabilities we are recording here. For deferrals, I'm giving example of liability here. For example, last year, your cash advances, which you have received from the customer, against that cash, you didn't provide any goods or services. For example, last year, cash advances are unearned revenue. Unearned revenue was, for example, $100. And this year, your unearned revenue is $120. You can see here, it is increase in liability. Right or wrong? Increase in liability. Now you have to think, because it is cash advance, which you have taken. Now you have to think why liability has increased, because you have received the cash. So it means it has cash effects. Right or wrong? So some deference you need to adjust. right? Deferrals of the transactions, right? Then some other items we also need to adjust, which is 4th category. That is called what? Accruals. Accruals. For example, you have a salary table, assume, of this year, but it's not yet paid, but we have recorded as a expenses, but cash will be paid in the future. So these kind of accruals, because it has no cash effect so far, so we need to adjust it. Mostly deferrals are for past periods, and accruals will have cash effects in the future, right? You don't need to memorize this information for your exam. You need to at least memorize the format only, but I'm just sharing a concept with you. So when you adjust your net income for mostly these 4 categories to arrive at what? Cash flow from which activities? From operating activities. From operating activities. So this is what is called indirect method, because indirectly you are moving to the cash flows. Done? Clear, guys? Now, guys, I'm going to work with the first item, which is what? Cash flow from or used in which activities? Operating activities, right? And we are using which method? Indirect method. Clear? So here we go. First, we are going to discuss indirect method. Note 1, right? We are going to talk about format now. Operating activities. Obviously, how operating activities are defined, as I told you. Operating activities are those activities which are not the part of financing activities or investing activities. By the way, these are your principal revenue generating activities, your day-to-day activities. Okay? And mostly under operating activities, just giving you example, normally which items will be the part of cash inflows? And obviously there we have also cash outflows from operating activities. This information I'm just sharing with you just to solve theoretical questions. Okay? For example, inflows. Inflows will include what? First item, cash receipts from sale of goods or services, including collection of account receivables. Second, cash receipts from royalties, fees, commissions, or maybe trading debt securities and any other revenue which is part of your operation. Cash receipt from what? In the form of interest or dividend. Right? Dividend mostly you might receive on the stocks which you have bought from other companies, like it is investment in the stocks of other companies. Right or wrong? So if you are giving loans to others, maybe you are receiving interest on that, that is also inflow. Right? For example, bank, their day-to-day operation is lending, right? They are lending the money. So interest will be operating activity. Then what are the parts of cash? Which items are the part of cash outflows? It might include cash payment to supplier for goods and services which you are buying in day-to-day operations, cash payment to employees, cash payment to government for taxes, duties, fines, and other fees or penalties, or maybe payment of interest on debt. Maybe you have taken loan and you have paid the interest on that. Under US GAAP, interest payments and interest receipts both are the part of operating activities. Don't forget. But for dividend, we have 2 points. If you have received the dividend over investments, right? The dividend received will be the part of which activities? Operating activities. But the dividend payment on your own stock which you have issued to the company, it will be the part of financing activities. Don't forget, under US GAAP. Okay? Because this is the common mistake which you can made in exam also. Don't mingle this data. Right? So interest payments and receipts both are the part of operating. But dividend payments is the part of financing. Dividend received is the part of operating. Right? Now I'm using indirect method and I'm taking you to the calculation side. Okay, guys? So here we go. It's written here, note guys, in CMA exam only which method you have to use? Indirect method. Okay? So here we go. Indirect method, I have already told you these 4 adjustments we do. Right? We can, why it's called indirect? Because we are converting income statement profits to the cash flow. And we are adjusting these 4 items. And automatically these 4 items will be in the adjustment which I'm going to show you now. So here we go. This is the more important information. Okay, which you have to remember their workings, how to get the values for your exam. So first section we are going to talk about cash flow. Okay, from are used in operating activities and it is indirect. Ready? Here we go. First item which we have to take, that should be your what? Net income for the period. It's also called profit for the period or loss for the period, whatever you have. Right? If you have a loss, you will place as a negative value. If you have a profit, you will place as a positive value. Done? And this value from where it will be available? Income statement. Assume if it is not straight away available in the question, then you have to refer to working 1 to get this value. Right? I'm going to tell you how to calculate the net income for the period or net loss for the period if it is missing by using statement of retained earnings. Statement of retained earnings. So here we go, refer to the working 1. Here you can see working 1. Calculation of net income or net loss for the period. As you are using retained earning accounts, normally retained earning account, a statement of retained earning looks like that. Let me write first straight away equation. You will always take opening balance of retained earnings. You will add their profit for the period. Profit for the year means a net income, right? From the income statement, you will add. Or you will deduct what? Loss for the period, for the year, you will deduct. Obviously, it could be one thing, right? It will be either what? Profit or loss, right? And from there, you subtract always what? Dividend declared. Dividend declared, you deduct. I'm ignoring here adjustments to retained earnings, only that. So this will be equal to what? Closing balance of retained earnings, right? And we will reverse this equation to find out this value. To find out which value? Profit for the year or loss for the year. This equation we have to reverse. Now you will reverse, you will take first of all on your calculator, you will take closing balance of retained earnings, that amount. Because when you go reverse, guys, plus will become minus and minus sign will become plus. So you will plus dividend declared because here it was minus value. We have to reverse it. Okay. Minus what? Beginning balance of the retained earning because it was plus value, opening value. So you have to deduct now. So this will give you what? Net income or net loss for the period. If you got on your calculator positive value, it's net income. If you got on your calculator negative value, this is net loss. First item is clear. So you have to memorize these formats in order to solve question. Because maybe in MCQ sections, he might ask you only to produce any one value from this equation. So you need to know how to reverse it. Clear? Second is what? We are coming back to the main format. We will add back depreciation expense or amortization expense from where? From the income statement. Right? Why we are adding? Because it is a non-cash based item. And you have deducted when you prepare the income statement. So now you need to add back because it's a non-cash based item. So let's assume if depreciation for the year is not given. How you can work with that? It's written as a reference of working 3, not 2, working 3. So working 3, you will go here and you have to memorize this format for working 3. How to calculate depreciation expense or amortization expense. Right? And to get this value, by the way, we can use different accounts, but here I will use what? Accumulated depreciation ledger. That accounts we will use. Okay, to get this value. Right? We can get this depreciation expense by using carrying value data also. Carrying value I will explain with the investing activities. That equation you can also reverse to get this value. Okay. So guys, normally, for accumulated depreciation, normally what is the ledger? How it looks like that? In statement form, I'm telling you. We will always take what? Opening balance of accumulated depreciation. Right? We will add depreciation expense, right? For the period which you will write in the income statement. Right? Clear, guys? Deduct what? Deduct accumulated depreciation on assets sold. Maybe you have sold certain assets during the year. You have accumulated depreciation because that should be removed. Right or wrong? From statement of financial positions. So that you always deduct from accumulated depreciation account. You will deduct. So this will give you what? Normally it will give you what? Ending balance of accumulated depreciation. But here my purpose is to get this value. Right? Depreciation expense. Same way you can use the word amortization also. You can use accumulated amortization account similarly. Done? So how you will get? It means now you need to reverse the equation. This is the right equation which I have written here. And here it is the reversal of that equation to get depreciation expense for the period. First of all, we will take here what? Closing balance of accumulated depreciation. We will add back accumulated depreciation on asset sold and we will deduct opening balance of accumulated depreciation. So balancing figure will be depreciation expense. Clear? So this depreciation expense you will take and you will write where you will add back to the net income. Okay. Clear? Third item is what? These two items I'm going to explain with one. It is about what? This transaction is about non-current assets. Because you could have sold certain assets during the period. Right? Now guys, here what you have to take? You have to take loss on disposal of non-current assets. Or you have to take what? Gains on disposal of non-current assets. Right? Actually, what happened on the back end? Why we are adjusting here? Because actually, non-current asset belongs to investing activities. We have to remove the effects of investing activities from the operating activities. And when you are removing, what do you have to do? Because loss you have already deducted in the income statement. To reverse it, what we will do? add back. Gains you have already added in the income statement. And now to reverse it, what we will do? Less. So then what is the point here? The point is, maybe the gain or loss value he will not give you directly in the question. So how to get the value of gain or loss if it is not given? So guys, so we have to refer working 2. Clear? So working 2 we are going to perform. Here we have a working 2. Calculation of what gain or loss on disposal of non-current assets. Right? You know from your earlier studies, how do we calculate gain or loss, guys? We always take what? Sale price of the assets. Like which could be given with the name of cash proceed, sale price. If sale price or cash proceed is not given, we will assume residual value is our sale proceed. Okay. Then guys, from sale price of asset, you will deduct what carrying value of asset sold. Carrying value is also called net book value. And you know how to get this net book value? You always take cost of the asset, original cost, historical cost, minus what? Accumulated depreciation. Right or wrong? So you will deduct accumulated depreciation from the cost. This will give you what? Carrying value. If your answer is positive here, like sale price less carrying value of assets sold. If answer is positive, it is called gain on disposal. If answer is negative, it is called loss on disposal. In other words, whenever our selling price is greater than carrying value, it is called gain on disposal. If your selling price is less than carrying value, it is called loss on disposal. Agreed? Clear? So this gain or loss you have to adjust there. Loss you will add back there, and gain you will deduct from them. Clear, guys? Please remember, later on, because gain or loss we adjusted in operating activities, but this sale price will be recorded as inflow in which activities? In investing activities. Because you sold the assets, you got a cash, it is investing activities, you have to write it there. Clear? We will see once we will reach there in investing activities. So coming back to the format again, guys. Now here, next item which we are going to discuss. This topic almost we will study in unit number 3. Adjustment which I am going to tell you now. But I will tell you that specific data which you have to perform in order to complete the cash flow statement. Right? So here, what's written here? If you will look at here, it's written here undistributed earnings on equity method investment. On equity method investment. So please remember here, let me tell you a little bit background of this. Especially, for example, there is a company A has acquired company B, but company A has acquired between 20% to 50% of voting rights of the company B. This is called investment. Maybe you have purchased 30%, 40%, but between 20 to 50%. Under US GAAP, we have a 2 options. This is your investment, you know. We have a 2 options to account for this investment. We can use either equity method, which we will study in unit 3, but desired information I will tell you here. And we can use here fair value method. Under US GAAP, I'm telling you. Okay? Now, in equity method, guys, For example, if you purchase 30% of other company, 30%, it means it's like that you will get 30% of the profit share. You will get 30% profit share of investee. If investee means in which you have invested, if they are incurring losses, you will get share 30% of the losses as well. It looks like a partnership. Just I'm using partnership word, don't use an example. Right? Clear? Now under equity method, let me tell you here, whatever your profit share or loss share which you will get from equity, that is written in statement, in income statement as revenue or expense. Obviously, if it is profit share, it is positive value in the income statement. If it is loss share, it is a negative value in the income statement. But what we are doing here, and what is undistributed earnings, actually we are going to adjust accrual effects here. Okay, let's understand how it will work. Let me give you an example. For example, I'm just telling you, for example, company B's profit for the year. Profits for the year is 100,000. Right? And we are preparing statement of cash flows of which company? Company A. Company A is the investor. How you will get profit share? This working I'm doing for company A. Profit share. You will take profit for the year of investee. Of which company? Of investee. Multiply by holding percentage. Understand? Profit for the year is how much? 100,000 of investment. And our holding percentage, I am assuming we have how much? 30%. It means our profit share is how much? 30%. Right? Now, once you got a profit share from this profit share, right? Because this whole profit share you have written as income, where in the income statement it is added there. But it might have some accrual effects. Which accrual effects? For example, from this profit share, company has received dividend. What? Dividend from the investee of 10,000. Actually, this is cash inflow, right? But how much income? Because how much income you have recorded in the income statement? 30. But actually you received how much? 10 in shape of dividend. Profit shares you recorded 30. But actually you received what? 10,000. Right or wrong? It means remaining 20,000 is accrual base. So what you have to do now? It is added in the income statement. Now you have to deduct it. Right or wrong? So that is what is the format? You have to follow this format. You have to calculate first what? Profit share of investor in investee. And profit share, how you will get? Profit for the year of investee multiplied by holding percentage. From there you will deduct what? Amount of dividend which you have received. So remaining is called, which you have to adjust. Remaining is called undistributed earning. Undistributed earnings. And this you have to adjust where? In the statement of cash flows. Clear? In your exam, maybe straight away he will give you MCQs for this working only. Got it? So this is what is written similar. This value I need in undistributed earning for statement of cash flows. And we will deduct from there. And it's written here how to get it. So first you have to calculate what? You have to take net income invested times holding percentage. This will give you what? Share in profit or loss. You will take this share in profit or loss minus what? Dividend received. Remaining value you will adjust. Got it? Then guys, there could be another adjustments regarding equity method investments. By the way, in detail, we will cover in study unit 3. What is equity method investment? Equity method of investment, right? So here, I'm just telling you cash flow trends. Now guys, here you could have here what? One more adjustments. you might have relevant to equity method. For example, maybe I'm assuming previously your holding percentage was how much percentage? 34. Maybe 5% of this investment you sold during the period. So you could have gain or loss on that. Those gain or losses on disposal of investment might also be included in the income statement. And we have to reverse the effect of gain or losses now. Reason, it belongs to investing activities. In operating activities, you have to reverse. Understood? So how you will get, so look at here next adjustment. It's written here. These two adjustments I'm telling you together now. Gain on disposal of equity method investment or loss on disposal of equity method of investment. And it is referred here working for. And you have to memorize this format strongly in order to get this value. Okay? Gain or loss on disposal of investment, equity method investments. Done? So here we go, working for, I'm going to show you. Here we go, working for. Understood? Here we go. Gain or loss on equity method of investments. First of all, you have to take it here. What you have to take? Sale proceed. Like what money you have received. He will tell you the question. Like you sold this investment for 20,000. Let's say you will put 20,000 as a sale proceed. You will deduct what? Carrying value of investment sold. Like the investment which you have sold, what was the carrying value of that investment? And here he can play with you, he can give you straight away carrying value of investment sold, or he might miss this figure. If carrying value of investment sold is missing, then you have to work with this equation to get carrying value of investment sold. Okay? You have to memorize. I cannot do anything. I can just explain. And what's the question here, guys? You will take it here, first of all, what? Beginning carrying amount of investment. He will tell you in the question. Right? You will add there equity in thrice. Current is the name. Thrice is actually the name of company from where I cropped this picture. It's simply profit share in the investing. What it is? Profit share in the investing. If it is a loss here, you will deduct. If it is profit share, you will add. And I told you how to get profit share, right? Just previously. And from there, you will deduct. What you will deduct? Dividend received from investing. And then you will deduct one more value, what? Ending carrying amount on your calculator, whatever you will get, that will be your carrying amount of investment sold. And this value you will bring it here. Right? You got a sale proceed here. You will deduct carrying value of investment. Right? So if answer is positive, that is called what? Gain on disposal of equity method investment. If answer is negative, it is a loss. So what you will do? Gain you will deduct from statement of cash flows, and loss you will add because it is deducted in the income statement. So you have to add that. Clear? And one more note. Gain or loss will be adjusted in operating activities. What about the sale proceed? This sale proceed, you can see the arrow. This, look at the note. This sale proceed will be written as inflow in investing activities also. Understood? I hope so. Okay. Now, guys, moving to the next item. Operating activity is a bit long, but it is interesting if you will understand. For me, it is interesting. For you, you have to memorize equations, right? So, bit technical. So here we go. Add one more thing. What? Impairment of goodwill. By the way, impairment and goodwill will study in unit 3 under intangible assets. But here, assume it is given. And we assume it is a non-cash based item. Which item? Non-cash based. And impairment loss, we deduct in the income statement, always. And here we have to what? We have to add back. And I'm assuming it will be given the cost. Okay? Clear? Once it is done, guys, now you have to do some adjustment, plus minus. Adjustments relevant to the working capital. Let me give you simple examples here. Actually, it belongs to deferrals and accruals. But I can tell you another way also. This section belongs to deferral and accruals mostly. Okay? But I can give you another example as well. Because changes in current assets. Let me just give you a simple example. Okay? Changes in current assets. Sometimes it is not recorded in the income statement. Do you want example? For example, you received the cash from the customer. What entry do you pass? You will pass debit cash, credit, receivables. Right? Tell me, this transaction will go to income statement? Obviously not, because both are balance sheet ledgers, but it has cash effects. So it means it should be recorded. Right or wrong? Let's say we have made payments to the supplier. Another example. Simple version I'm telling you. Let's say we have made payments to the supplier. That is also working capital, because current assets and current liabilities are called working capital. Current assets minus current liability. So now when you made payment to supplier, you will debit what? Supplier account. Credit what? Both are balance sheet account. Nothing will go to the income statement, but it involves the cash payments, and it's like a day-to-day operations. Understood? So now changes in current assets and current liabilities, we will also record in operating activities. Okay? Please remember, guys, so there are two adjustments you can see here. It's written in add or less. Add, you have to add or you have to deduct what? Changes in current assets. Increase in current assets will always be treated as outflow, and decrease in current assets will always be treated as inflow. Now, guys, remember here. In current assets, you might have a different current assets, but don't do this working for cash. No. In current assets, you might have, I'm telling you, current assets. You might have a cash, you might have a receivables, inventory, prepayments, right or wrong, a lot of different items you might have. Don't do this with the cash. Cash and cash equivalents. Ignore those two values. And for other current assets, for example, for receivables, you have to calculate movement. What? Movement. For inventory, movement. For prepayments, movement. How you will get movement? Obviously, you need 2 years data then. You need last year balance sheet and current year balance sheet. For example, this is your last year. LY stands for last year, current year. For example, you have receivables. Last year it was 100. This year it is 80. So what it is? Movement is 20. It means receivable is decreased by 20. Now you need to think why it has decreased. You collected the cash. So that is why in all current assets, you will apply this rule. Whenever there is a decrease in current assets, we will treat as inflow. And whenever there is a increase in current assets, whichever it is, in receivables, inventory, prepayments, it will be treated as outflow. Clear? It means line by line item you have to calculate movement. for receivables, for inventory, for prepayments, whatever current assets you have. But don't do with the cash and cash equivalents, because cash and cash equivalents are adjusted at the end of the cash flow statement. Right? What's the rule for current asset? Increase in current asset, inflow, and decrease in current asset will be treated as outflow. Clear? Current liability rule is different. For each line by line item of current liabilities, again you have to calculate what? Movement. For example, you could have interest payable, or you could have, let's assume, some payment payables, trade payables. Let's assume trade payables you have. I'm changing this word. This receivables to payables. Let's do this payables. Movement you are calculating. Last year payable was how much? 100. This year is how much? 80. Payable is decreased by 20, right? Now it's not inflow. Why it has decreased? Because maybe you paid the money to the supplier. So it means whenever there's a decrease, remember the rule for current liabilities. Decrease in current liabilities will be treated as outflow, and increase in current liabilities will be treated as inflow. Clear? So this is the rule for current liabilities. Then increase inflow, decrease outflow. It is totally other way around to the current asset side. Got it? Right? Once it is done, it is also called, like, up to this, you can, if you want to summarize, up to this, once you will get final answer. That is also called cash generated from operations. Okay, but I'm continuing with the format. Okay. Now we have some other adjustments under operating activities. Here we have to write here what? Interest paid, interest received, paid is outflow, received is inflow, dividend received, dividend payments will be the part of financing activities I told you earlier. Tax or fine paid. How to get these values? Maybe straight away payment side might not be given, or receipt side might not be given. Maybe he told you accrual basis data. Right? So first of all, I'm going to work with what? Interest paid and tax paid, these two things together. How you will get it, huh? First, interest paid amount, how you will get it. Right? We are calculating what? Interest paid amount we are calculating. And by the way, from which ledger you can get this value? You can get this value from interest payable ledger. Which ledger? Interest payable ledger. And interest payable ledger, if I will write in, I'm writing here in a statement form. So how it looks like that? We have to take, because it's liability account, right? Interest payable ledger. You have to take what? Opening balance of interest payable. It will be given in the question. You add there always interest payable. You add there what? Interest expense. This value from where we are taking from? Income statement, because in income statement accrual basis is recorded, right? And you will deduct there from there what? Interest paid during the period, right? And it's equal to what? It's equal to closing balance of interest payable. This is the correct ledger. But I want which value for cash flow statement? This value. Which value? interest paid. If it is not given, so you have to reverse the equation. Once you reverse the equation, how it will work, guys? Now, how it is going to work, guys? You will take what? Closing balance, right? Minus what? Interest expense, minus what? Opening balance. I'm reversing this equation. Huh? If sometime maybe when I speak, I could use different word. Maybe plus or by mistake I can say negative. But you have to reverse. When you reverse, plus will become minus, minus will become plus. So this will give you what? Interest payments. Right or wrong? Which we need for what? Statement of cash flow. Agreed? Now, guys, same. If you want to calculate tax paid, so wherever the word I have used interest, I will use the word what? Tax. I'm removing word interest. And I will add the word there. Tax. Right? Let me remove word first. How example, if you want to calculate tax paid, or penalties paid, or fine paid, so you have to go to which accounts? Tax payable. Okay, deferred tax or income tax, whatever you have. So guys, if you have, you will have opening balance of tax payable plus tax expense, which is written in the income statement, less what? Tax paid is equal to closing balance of tax paid. I will reverse this equation now. Closing balance minus what? Tax expense minus what? Opening balance of tax is equal to what? Tax paid, which I will take to the statement of cash flows. Done? Understood? Now I'm going to work with these two values. Which two values? Interest received or dividend received, which will be written as inflow. Under which activities? Operating activities. For interest received, we have to use interest receivable ledger, writing in statement form. It's asset account, right? So you have to write what? Opening balance of interest receivable, right? Plus what? Interest income, which you have recorded where in the income statement, minus what? Interest received during the period is equal to what? Closing balance of interest receivable. And I want here for cash flow statement this value. Interest received. How we can reverse the equation, guys? Help me. Closing balance, right? Minus interest income minus what? Opening balance of interest is equal to what? Interest received, right? Clear? This value we need for what? Statement of cash flows. Clear? So guys, now if you want to calculate dividend received, wherever the word I have used interest, I will use the word there dividend. Now here I will say dividend received. I will get from dividend receivable ledger. How you will get opening balance of dividend receivable plus dividend income minus dividend received is equal to closing balance of dividend receivable. Here you want to reverse closing balance of dividend minus what? Dividend income minus opening balance of dividend is equal to what? Dividend received. Just replace the word interest with the dividend, you will get the dividend received again. Correct? So guys, once you will do all these adjustments, finally we will reach to this value, net cash flow from which activities? Operating activities. Understood? If this final answer is negative, we will use the word net cash flow used in operating activities. If it is positive, from operating activities. Okay? Now we are going to move to second activity, which is called what? Cash flow from or used in investing activities. Investing activities, as I told you, here you will deal with your own non-current asset, their purchase and sale. You will deal with the investments. If you're buying stocks or bonds of other company, you will deal with the loans or advances which you are giving to others. Okay? So that is your investments. And mostly these are cash inflows or outflows. Obviously, when you buy a non-current asset, you have to pay cash, it is outflow. When you will sell non-current asset, you have to receive cash, it is a inflow. Right or wrong? So with the format we are going to discuss. So here we go. First, we are dealing with non-current assets. Non-current asset means to say even investments. Okay. So non-current asset, first I'm talking about, let's do PPE. So when you sell any non-current asset, obviously you will receive cash. So that should be recorded as inflow. So what's written here? Sale proceed from sale of non-current assets. Sale price you have to write, not only gain or loss here. Sale proceed, which will include the fact of gain or loss also. But sometimes it's referred working one. Maybe sale price is not given in the question. So how you can calculate then? Look at here working one. You know, we learned previously how to get gain or loss on disposal of non-current assets. We took their sale price of the assets. We have to deduct carrying value of asset. This is equal to gain or loss on disposal. But this value I need for investing activities. Sale proceed. What if you are given with these two data? With carrying value and gain or loss. So how you will get sale price, guys? Remember this. Carrying value plus gain on disposal is equal to sale price. Or carrying value less loss on disposal is equal to sale price. So this is how you will get the sale price. Even question will tell you this two information. Carrying value plus gains or carrying value minus loss. Plus minus you have to do. He will tell you carrying value and gain or loss value. Clear? So this you need for investing activities. I hope that is done. Second is what for investing activities? We need cost of asset purchased. Sometime obviously you might have purchased certain assets during the year. So for that you have paid the money. So that should be your what? Outflow. But maybe in your exam, cost of asset purchase might not be given straight away. You have to work with it. So if you have to work with it, you have to refer working to. How to get this value? Cost of asset purchase. Done? There we go, working to. Guys, remember there, working to I'm going to explain. Mostly, when we record our PPE, property, plant, and equipment in balance sheet, so this is how we record. We record cost of asset, less what? Accumulated, Depreciation is equal to what? Carrying value. Please remember, if in your exam cost data is given, which data? Then you will follow this side in order to get cost of asset purchased. And if in your exam carrying value data is given, which data? Carrying value, like beginning carrying value, ending carrying value, then this side you have to work with to find the cost of asset purchased. Clear? I'm just making arrow here. Cost side means this equation, and carrying value side means to say this equation. You have to know. Okay. And here, guys, for cost, just putting information here. For cost side, this side, I'm explaining this side. Generally, what is the equation? We have opening balance of cost, opening balance at cost, plus what? Cost of asset purchased, minus what? Cost of asset sold. Cost of what? Asset sold is equal to what? Closing balance of asset at cost, right? Here I want to find which value? Cost of asset purchased. And I have to reverse the equation. So what will be the equation? We will take what? Closing balance of non-current asset at cost plus cost of asset sold, deduct opening balance of non-current asset at cost is equal to what? Cost of asset purchased. Here it is the reversal actually. Here we are doing reversal. Here, reversal of this equation. Got it? Sometime, if data is given about which values, this is the right equation is written. Which equation? And this you have to reverse in order to get cost of asset purchased. What is the right equation first? Understand. We are taking here what? Beginning carrying amount of the asset, beginning carrying amount, carrying value, plus what? Purchases during the period, plus what? Depreciation expense for the period. Deduct depreciation expense for the period because it reduces your carrying value. Minus what? Disposal, carrying value of asset disposed during the period. You will deduct, you will get which value? Ending. But for cash flow statement, what we need? For cash flow statement, I want to calculate this value. And I have to reverse. When I will reverse, what I will do? I will take ending carrying value plus disposal plus depreciation minus beginning. Automatically, I will get purchases during the period. Done? You have to work, you have to memorize. Okay, guys? After that, moving back to the format. So non-current asset adjustments are done, right? Now, when you buy but stock of other company, obviously, purchase of stock, when you buy, it is your outflow. And sale proceed from sale of stock, it will be your, do you remember I told you previously, equity method investment, right? In operating activities, I told you there you will adjust gain or losses and undistributed earnings. And then I told you sale proceed from the sale of equity method investment. You will write as a investing activities also, right? You can just go refer there and check there, right? I told you this point. Then you have a what? Bonds of other company. For example, when you purchase the bonds of other company, you will try to record as a outflow. When you sell the bonds of other company, you will record as a inflow, right? Then you have to write here what? Loans to other. You have given loan to others. So it is outflow from your business. Once the other people will make repayments, because see, let's say you, this is you. You gave loan. When you gave loan, guys, this was what? Outflow. Obviously, in future, the people will return you, right? The loan, they will return your principal value, plus they will return you interest. This interest receipts on loan to others, you will record as operating activities. But principal value you will record here as an inflow. When you give loan to other, it is outflow. When the other people will make repayments for that loan, the principal value will record as a inflow under which activity? Investing activity. Okay, and once you will do plus minus, this will be the final total cash flow from or used in investing activities. If this answer is positive, I will use the word cash flow from investing activities. If this answer is negative, I will use the word cash flow used in investing activities. Right? Now the last activity which we are going to discuss now, that is financing activities. Which activities? Financing. Okay. In financing activities, guys, mostly you are dealing with your own stocks and bonds. And you are talking about sources of finance here. Right? From where you are getting money through issuance of stock, through issuance of bonds, by taking loans. These all are inflows. Outflows are what? When you repurchase the stock, you have to pay. When you repay to the debenture holders, bond holders, you have to repay. It's outflow. And when you have to make repayments of your loan, it is also outflow. But interest payments on loan will be the part of operating activities. Understood? Dividend payment will also be here, obviously, right? So here we go. Let's have a look. So here we go, guys. As I told you, we are dealing with here our own stock or bonds, right? Right, guys? So here we go. When we issue the stock, it is inflow because we are receiving money. Or even when we issue the bonds, it is inflow. When we repurchase the stock, it is outflow. Or even when we make the repayments for bonds, but only which amount? Principal outflow, because interest payments will be recorded under operating. Then when you are taking loan from others, it is inflow. When you are making repayments of loan to others, but only principal, that will be your outflow. Dividend paid on your own stock, it is outflow. And then here, guys, something about the lease. Lease I will tell you later. So this is called what? Cash flow from which activity? Financing activity. Now, guys, let me tell you about lease. Lease, by the way, once I will teach you proper accounting of lease, there I will tell you cash flow effects. But here I'm talking about only from lessee point of view. From whose point of view? Because mostly, most of the companies are lessees. They are taking assets on lease. Right? So here we go. Please remember, these effects are written here also in order to just solve critical questions. Under US GAAP, for lease, we have 3 types. One is called which lease? Finance lease. Second lease is called what? Operating lease. And third lease is called what? Short-term lease. For finance lease, what is the rule? Principal payments and interest payment. Obviously, interest payment will be the part of operating activities. Principal repayments will be the part of financing activities. For operating lease, remember this, huh? For operating lease, again, for operating, I'm telling you. Principal payments for operating lease. Principal payments will be the part of not financing. If both principal plus interest, both will be the part of operating activities. Even for short term, same rule you will apply. Principal and interest both will be the part of operating activities. This is from less 3 point of view. From less over, it is something different because most of things will fall under investing because he is investing, it's his business. Okay, but just remember from the SC point of view. And now, guys, here we have some disclosures, requirements. Major statement of cash flows notes disclosure. What they are telling you, they are saying that information about all non-cash investing and financing activities you have to disclose. Like there are some activities which are non-cash, right? And you have to disclose, for example, few examples, and you have to memorize these points. Number 1, conversion of debt to equity. For example, company has issued the bonds, and company is saying we will convert into common stock. Like return our bonds, we will give you common stocks, ordinary shares, right? So obviously, in this conversion, there is no cash involvements. You are taking one thing, you are giving other things, so it is non-cash. Second thing is what? When you take assets on lease, let's assume with zero down payments. I bought the asset, but there is no cash payment so far. Right or wrong? So second is what? Acquisition of assets, either by assuming direct related liabilities are by what? Less is recognition of finance or operating lease. This will also be, we will disclose. That is what? Exchange of non-cash assets or liability for another. You are changing two things. Maybe I'm taking table by giving chairs, right? So this is what? Non-cash. Please remember, guys, this is what, that is it for today. So see you in the next class, guys.